Hello, traders. It's 8 a.m. Chicago time on Tuesday, the 9th of June, 2020. This is episode number 1772. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off sentiment looks like we're allocating to safety this morning. Gold leading the pack. August gold is trading at 1723.50. Up $18.40 or 1.08%, followed by the bonds, which are up over a handle. The bonds are up a handle and 22 ticks in the futures. The yen is up. The 10-year note is up 14 and a half big ticks, and the Bund is up 19 cents, 19 ticks. The DAX is the weakest of the bunch. The DAX is off 227 points or 1.77%. The Russell also extremely weak today at down 26 points or 1.7%. So that's where we stand this morning. We are really pushing risk off. It looks like a big drop right at the European Open today as the markets are digesting what is starting to appear like an overshot rally here for the short term. We'll talk about that a little bit. Investors are focused now on the Federal Reserve. Remember, the FOMC decision comes out tomorrow. The policy meeting starts today. European shares fell, dragged down by declines in cyclical stocks. In Asia, Japan's Nikkei ended lower, with automakers and chip-related companies leading the fall. The Australian dollar slipped after China's education ministry warned students to carefully consider studying there amid tension between the trading partners. The US dollar was higher against a basket of rival currencies. Gold rose on increased appeal for the safe haven metal. Oil prices were in the red, weighed down by oversupply concerns after it was announced that a trio of Gulf producers would end voluntary output cuts. So that's the mishmash we have for today. The bottom line is, and I'll go over what happened yesterday. The market is a little bit extended, in my opinion, and is likely to start correcting next couple days here. Again, the biggest thing to pay attention to is the FOMC tomorrow. Now, while I have you here, I want to remind everyone that we're hosting the Small Exchange, a panel of the managers from the Small Exchange today. For those of you who don't know, the Small Exchange launched June 1st. EdgeClear will be hosting their first ever webinar, and it's a chance, a rare chance, to ask direct questions. We're reserving about 20 to 25 minutes of Q&A. If you have questions about the Small Exchange, once you've seen what they're offering, please let us know, and we'll forward those questions to them. This will be live and it will be recorded. The link is shown in front of you, but it's also available in the description of this TraderBite video. You can find it there, and it's also in the link. In the link that I'm about to post to the YouTube live chat. It's again, it's also on my Twitter feed. Just look for twitter.com/futurestrader71. Please register for this event. Hopefully you'll attend. This is a product that they have they're releasing 3 products: an index, a Forex basket, and a metals product with micro crude and micro yield coming in the next few months. I believe that this is going to be an important product for all of us online traders. So let's move to the review segment. Yesterday, oh, and what's on deck for today? The calendar. It's slow internet day, I guess, even though we're on fiber. This morning, a balance of trade came in out of Germany at 3.5 billion, expected 15.9 billion, huge miss there. several numbers out of France. The Eurozone employment change came in stronger than expected. GDP growth out of the Eurozone came in slightly better than expected, -3.6 versus -3.8, a contraction. And then today, looking ahead, we have wholesale inventories at 10 Eastern, a half hour after the open, expecting 0.4. The prior is -1. JOLTS job openings as well. This is a number that describes the number of job openings that are unfilled in the United States. That comes out at 10, and expecting 5 million IBD tip, which is not a high tier. But the main thing is, of course, the FOMC. We do have the Australian Westpac Consumer Confidence change at 8:30 p.m. And then we have the inflation rate year on year for May from China at 9:30 p.m. That's what's on deck for today. Here's what we're looking for based on yesterday's context and the key trades for the day. The primary trade is a pullback to 32.02, looking for a pop higher into 32.25 and a quarter. That's the primary. The secondary is a test above the prior day's high of 32.1050 for a push of 32.1650 and then a drop back down into the range, consolidate at the point of control, and then move back down and potentially test that low 31.68. Was looking for it to test 94.75 and stabilize at 89 momentarily before selling off into the close. So again, the primary scenario is a push to 32.0225 and then a pop higher 32.25. What it did though is it pushed deeper down and it pushed higher up, giving us quite a wide range, almost 40 points yesterday, just so you can't keep a good market down. So we squeeze higher. We miss the prior day's high, which is this green bar right here, green line, and we rotate down to the next stock zone below the 32.02, which was 31.94. Those of you who are Convergent members saw me talk about 31.94 being the key target below. And then we breach the other side. So we have a small IB extension. This is what's called a failed auction. It poked through the IB low, and then we have an impulse up. So now it's long side only. With the impulse up, we're looking for the mid, and man, was it on point. Look at that mid trade right there. The blue line is the mid, as many of you know. Pulls back to the mid. We already went neutral on the session, and we're looking for this to push higher, and it did. The target, remember, on the long side is 32.25, and it managed to go to 31 and a quarter, push the next level up and hit the MC point of control from way back in December. And you know, we're really racing towards that all-time high. Hard to believe, yes, but here it is. So yesterday, neutral, again, drop below, push above. So that's neutral. So now our options are neutral normal, neutral extreme. And because we closed up near the highs with a pretty weak high, look at that poor high there. This is a neutral extreme up day. The expectation is we reopen at some point in the overnight session. We would take out the overnight high, but we didn't. We managed to push to one tick below the prior day's high and failed from there. This is quite a surprise. Again, it brings in that Monty Hall problem. And now that it cannot do the obvious, then there's a much higher probability of doing the opposite, which is to push back down to the point of control, at least 32.05, potentially lower. And that's basically what it did. So yesterday is likely to be a reversal day, and we're going to look for the FOMC to show us the next leg. So let's look at the overnight session. There's the overnight session. We open up and it's really quiet, and we expect the prior day's high to be taken out, at least poked by a tick, at least statistically. But what happened is at 1 o'clock, when the market opens and the balance trade number comes out, um, we just get the Europeans get into some serious selling, and they take out the range in one move, one big impulsive move with Delta to follow. So this sell-off is pretty serious, is pretty meaningful, and it's holding. It created two distributions: the Asian session distribution, and then the European session distribution, the overnight session, and 3212 being the cutoff point, 3210, 50 being the mid of the session, 3208 is the VWAP. So what we have is this region right here being the key stop or risk control region for shorts right here, 3210, 3208 through 3212. As long as that's not taken out, we're looking to turn down to 3168.50 and then potentially into the gap today. So that's what we have for today. A relatively weak low, several bounces off the bottom here. We missed the last low, the impulse low is 31.90. The second low, the pullback and continuation low, did not manage to take out the 90. So the impulse down is incomplete as of right now. That auction is incomplete. It didn't even bother taking out the 31.90, so I'm looking for it to do so on the open. So my bias, my key bias, or the key trade or the big trade of the day bias, is short for today. So that's what things look like in the overnight session. The volume is quite high, 419,000. There's a lot of participation overnight. Let's take a look at the order flow. Here's the order flow. There's the European Open, 1 o'clock Chicago time. And it's just immediately we see sellers come in. We see the delta, the negative delta rising. There's a lot of negative delta here in this move. The CVD is going from from positive to negative, and it pushes right through the liquidity pools. A lot of collisions on the way down, and we see this is a credible number here, 3210. Remember, between 3208 and 3212, which happens to be a stock zone, last week's high, also has this high liquidity area. This is the area to lean against on the short side. If we can get a short off that has good risk reward. Without good risk reward, we're just gambling. And so this would be the risk control area, the key risk control area for the session early on. And then underneath us, you could see that it's well bid, not so well offered. Underneath us, we have even more bids, 3189, 3180, and then we have that low from several days ago at 63, 64, something like that. Let me switch 1 second. 3168, 3168 down here. And then essentially what the market is pricing in right now is a decent potential for a rotation up or down, but there's more liquidity below us, and we are likely to push into this liquidity. If this was a void underneath with lots of offers up, I would say that the overnight inventory is likely to be balanced to the upside by buying. But the way this is set up and the way we're configured here, and we're sticking underneath the overnight point of control and that key 08 to 10 or 08 to 12 area, I expect that the path of least resistance is to 3180 as we sit here. Okay, so we're expecting some numbers a half hour after the open, but nothing really major. The big news is tomorrow, the FOMC, and so that's where that stands. Okay, so what are we looking for for today. So for today, by the way, a quick perspective on the delta yesterday. How was price supported by volume? Yesterday had really strong participation from the yellows. The yellows are the very large lots. These are consolidated trades. The yellow line represents trades that went off, actual trades or orders that went off that were 100 lots or better. And you can see that the move up yesterday was well supported by very large lots. And these could be hedges. These could be hedges against short positions. I don't know what the other side is, but the participation yesterday was mainly dominated by very large lots, which is uncommon. Generally, the trend of the market is supported by large lots, the white line, and sometimes by the orange lots, which is 9 lots and less, 9 to 1 lots. And what we had yesterday is really strong participation by very large lots. It seems like some hedging. This is pure speculation and guessing. There's no way to know what the other side is, but it seems like large or big money came in to hedge short positions, new short positions. So this is one interpretation of how to read the volume delta chart versus price, but that's in any case the action there was unusual. So let's move on to what's expected for today. Brought to you by EdgeClear. Here's what I'm looking for today. Da, 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 da. This morning, I'm looking for market to have an open auction. We are in range and value open auction. I'm looking for responsive buying back into 3202, potentially 05, that gets resisted down to the overnight low. Expect the overnight low to go rather than the overnight high. And then I'm looking for it to push to that 3181. Remember, there's high liquidity at 80 right here, which happens to be a nice high volume node. So I expect it to be turbulent here, but eventually I'm looking for that to break and for it to start testing the 6850 and then potentially down below. If I turn on the master levels here, you will see that we have this non-farm payroll gap, which has a gap mid at 3147.50. This will be the extended target, the midpoint of the gap, 3147.50. Not a likely, not expecting that much range, potentially into 3160.56 for the bounce into the close. And then come Wednesday, we have the wonderful FOMC decision giving us, uh, drifts and fits and things like that until the number comes out. The secondary is an open that immediately sells off, challenges the overnight low, gets down into the 3180 area, consolidates, and then impulses back up as we expend all of the selling that's available. And then it's time to push squeeze shorts at that point back up into 3200, 3205, and then likely to push to 3210 to 3212, that key area overnight, which is also the low volume node from the prior day. This area is really, really big. If we finish below 32, so let me put this on here, 3210 to 3212. Okay, if we finish below this today, if we finish below it, then we are likely to see continuation lower. We're likely to see an auction that has exhausted itself with yesterday's neutral extreme high, and we are likely to push into that 3147 area and to fill the gap. That's what we're looking for today. Those are the two main ideas. Again, I really, today's the day, 4:30 Eastern, we're hosting the small exchange at EdgeClear. For those of you who don't know, edgeclear.com is a specialized futures brokerage that I launched last month. I'm 100% owner of the firm, and I'm teamed up with a fantastic group of brokers, very knowledgeable, very experienced brokers who are also traders, two of whom are traders who fully understand what it's like to be an online trader. I welcome you to attend this webinar, and I definitely welcome you to support edgeclear.com and help us along. We are in the process of developing technology, and we hope to take the industry by storm and bring something more like uh, prop trading tools to the online trader to help you figure out how to grow in your trading as best as we can, hopefully. So, but for today, please take a moment and register my edge / small exchange event, caps for SEE, just as it's typed, myed.ge, and attend this webinar. We'll have the panel live, managers live from the small exchange. Good luck.